Our first witness is Ms. Kim Stubna. Ms. Stubna is the Director of Public Policy for the First Data Corporation, a payment processing company based in Greenwich Village, Colorado. First Data is the nation's leading provider of merchant transaction processing services, including credit, debit, private label, gift, payroll, and other payment solutions that power millions of small business transactions each day. Welcome.
Thank you, Madam Chair, members of the committee. Again, I'm Kim Stubna with First Data Corporation. I'd actually like to focus really on three areas today. The impact, again, to our nation's small business, as you alluded in your opening statement, the administrative burden that others in the payment industry, along with First Data, would be facing, and really a solution that we think would be a lot more simple. But first, let me just tell you a little bit more about First Data. So as mentioned, we are a Denver-based payments processor. We're a Fortune 500 company. We employ about 29,000 employees globally. And by payments processor, what I mean is that we facilitate the ability of merchants to accept electronic payments of all sorts: credit cards, debit cards, stored value, loyalty cards. So when you swipe your credit or debit card, say at a Safeway grocery store, we're the ones actually powering that transaction from the point of sale through Visa, MasterCard, Amex, Discover to the bank and back. And we do that for over 4 million merchant locations in this country. So again, as you mentioned in your opening statement, I mean, we're extremely concerned about the backup withholding requirement of this proposal. You know, excuse me. When we actually sign up a merchant to do business, we actually ask for the name that they're going to be doing business as, their DBA, which a lot of times is different than the name that they may have filed with the IRS. So, for instance, Dr. Bob Jones Incorporated may be on file with the IRS, but we have on file Jones Foot Clinic. So that's going to obviously result in a discrepancy that we would have to then institute backup withholding. If you figure conservatively, there may be 10% of our merchant base that has this discrepancy. That's 400,000 merchant locations in the United States that we would withhold 28% of their income. And as you mentioned, in this time of economic uncertainty, 28% could very well mean them having to go out of business. From an administrative standpoint, one of the difficulties is linking the TIN to transaction information. So again, when First Data signs up a merchant for business, we may accept their SSN, we may accept their TIN, do some due diligence, but once we actually start transacting for them, they're put into a different system. And we actually assign them a unique First Data ID, and we do that because of locations. So take something like Hallmark cards. They may have 110 on file with the IRS, but they may have 3,000 locations across the country that we're transacting for. So we assign a different ID based on each one of those locations so that we can track the transactions, look for fraud, things like that. On the other end of the spectrum, maybe you have a doctor's office where we have one unique ID for that doctor's office because of the transactions, but there may be 5 doctors within that office who each have TINs with the IRS. So even if we were able to link the two systems from the due diligence and the application process to the transaction, we still have the issue of reconciling all of those different locations, the different IDs, the TINs. So that's obviously an administrative burden that would be quite difficult if you look at 4 million merchant locations across the country. Also, there's an issue about inaccurate data reporting. So if you take an example, I go to Safeway, I buy $60 worth of groceries, but I decide to get $40 cash back at the point of sale. From a transaction perspective, First Data would report to IRS $100. We don't distinguish between the cash back. So that information then that we would report to the IRS would be biased against Safeway. So now we're put in an adversarial relationship with our customer because we're reporting information that is inaccurate, and you expose risk of litigation, all those kinds of issues. So you know, from an, again, administrative perspective, that's really problematic. And what we think is actually that there's a much easier solution. Why not add a line on the Form 1099 and have merchants self-report their number of electronic transactions? That's kind of follows the same rationale that the IRS has done in the past. In meetings that we had with them, one of the IRS personnel used the example that when they started requiring SSNs to be listed for each dependent that was listed, the number of people claiming dependents, or at least the number of dependents people were claiming, went down. So if this, why not at least try self-reporting and see if it meets, you know, we think it would increase some of the compliance and at least be much less costly than the current proposal. So really the bottom line is, again, administrative nightmare, 4 million merchant locations for First Data, others within the payments industry. And ultimately, I think that it would increase the cost of accepting electronic payments. We can't bear all of the cost of this proposal on our own. So we would pass a portion off to merchants who would likely pass a portion of their costs to consumers. So you're looking at increased cost of electronic transactions. And again, we cannot ignore the backup withholding issue and the fact that it would drive any number of merchants in this country to go out of business. Thank you.